Hello, hello, hello. Good morning to you from this part of the world. And depending on what time zone you're tuning in from, I wish you a good afternoon and good evening. Welcome to another morning mastery. I'm excited session after being away for the National Youth Games, where I said I took my daughters to participate in the chess tournament in the National Youth Games 2025 in Delta State. And of course, my daughter did pretty well in the tournament, where she was able to win for the first time personal gold medal, that is the silver medal, on board 2. Making her the second best female in that particular section. And of course, I do have some pictures to share with you guys so you can actually see what the experience would like. Let me see if I can find them. I guess they are somewhere here. Yeah. Okay, so this is some of them. As you can see, this is the boys team. This is their coach, and she's the one right here on at the right hand side right there. That's her, and that's me with her on the podium while after receiving a medal. And that's her, and that's the best under 14 female in the country at the moment, and she came in second behind her. And this was when she was receiving a medal. That's her coach. That's her. So this is the first, second, and third on that particular board. And this is the old team from Oyo State, and that is the male team. That is that again right there. So it was quite a very same time consuming, but it's worth it, as you can see. So it was a wonderful moment with the team in general. Hold on a second, I'm trying to see if I can still get some more pictures to share. Okay, so I think that's all to it at the moment. We still have some more, but I can't find the other ones. But that's just to give you a feel of what it was like. So we've missed about 3 sessions now, right? And today we are going to be diving back into the market, into the US dollar. Okay, sorry. All right. Sorry about that break. I was actually trying to sort out some things here. So it was an amazing experience. She made me proud. She won an individual silver medal on her board. That alone was worth every bit of the time away. Now, I will be honest, with all the movements, the travels, the late nights and early mornings during the tournament, I couldn't trade throughout last week, and this was one of the major reasons why I didn't run the Forex Morning Mastery. And of course, you know me by now. If my head and focus aren't in the right place, I don't force my actions. So trading deserves clarity, not divided attention. So I left throughout last week without trading, but now I'm back. We are back here again on the set, back in the flow, and I'm excited to catch up with you and walk us through what is happening in the market this week. Our goal is quite simple. We keep ourselves abreast with what we've missed so far during the previous week. Keep our head sharp, and of course position ourselves wisely in preparation for this new week trading session. So it's great to be back again with you. And for those of you who are joining me for the first time, my own name is Sharif. Daramola, and for the next 30-40 minutes I'm going on a trading journey where I will be sharing with you what my plans are for this week. As always, I'm going to be trading the USOIL spot, the GBPUSD once more time, and of course my favorite, the XAUUSD, popularly known as the gold spot. And of course, if you are a fan of any of these assets, you do not want to miss out on these interesting ideas I am about to share with you. Now, moving into the business for today, the first thing we normally do, of course, is to keep tabs with the US dollar market dynamic. We all know how important this market is, especially considering the assets we are looking at. There is no way you want to delve into the pound sterling, the crude oil, or the gold market without really having a background knowledge into what has been going on in the market and what market participants are looking forward to in the new week. Now, what you see on my screen is the DXY, that is the US dollar index, which gives us an overview of the US dollar's performance a specific time frame. Now, what you see here is the 4 hours time frame, and I am capturing the last 2 months. I'm starting from July, August, September. And what we did notice, the structure hasn't really changed from what we have been projecting in the last couple of weeks. We noticed that since July, the price of the US dollar has been showing some signs of recovery, and this resulted into this ascending trend line we spotted here. And of course, it seems like the ascending trend line still remains very much intact as price action still remains around that particular structure. Now, looking at what happened last week, like I said, I missed out on last week's trading session, but looking at what happened, let's zoom in to see things clearly. So last week, the market started somewhere around the $97.80 level, somewhere just right above that ascending trend line. Then we saw price drop into that demand zone. Remember, we had this demand zone between the $97.50 and the $97.70 area. We saw price dropped into the structure. We saw buy pressure resume during Monday's session, and price went to as high as the $98.60 zone during the Tuesday/Wednesday's trading session. That was driven by safe haven demand as investors were nervous. Yields was still relatively high. I mean, the US Treasury bond yield, and people were leaning into the dollar as a defensive play. Now, during the midweek into the second half of the week, we began to notice that price began to drop, and this was coming after job data reality check. We saw some reports from the US economic calendar which revealed that the mining. Then we saw the final one that came in on Friday, the August NFP, which was way softer than what market were expecting. Unemployment ticked very high, and this incited a possible 50 basis point interest rate cut from the Feds, and this sentiment hits the market strong, and as you can see, price significantly dropped all the way down into the $97.40 zone before we saw some buy traction resume again. Now, Treasury bond yield also sank after the NFP. Risk appetite returned, and the dollar gave back all its gains that it started the week. Remember, the week started somewhere around here and then closed around that same, just right below that particular structure to give us a break-even scenario. So to simply put, the dollar rose at the beginning of the week, touched a fresh high at $96.83, then tripped over the week labor data and limp back to where it started the previous week. Now, going into the new week, what are the chances of the US dollar? Now, looking at the structure of the technical structure on the chart, which obviously gives us an insight into how the sentiment of the market is looking like. The key level at the $97.70 area continues to remain valid for me. This level here had played a significant role in the last 4 to 5 months. Went to as far as June. Look at how it was a demand zone here. Then it happened to be a selling niche at this point. We saw a little bit of choppy market conditions around here. And since price broke above the structure during the last week of July, we can see how that level had continued to be a support line. Now, what this tells me is that it has a strong memory for buying power, right? And sellers continue to find it difficult to break through that structure. Then secondly, we can see that price is within that demand zone captured since July. Every time price comes in, we see market deeming it cheap enough to buy from that particular area. And if we zoom into what's going on now, even despite the poor NFP, we saw price dropped into this area. And since it dropped, price has been finding some buy pressure. Now, in the last 4 hours or so, we can see price dropped in here. This candle here closed in the form of a hammer candle, which theoretically tells us that buyers are still present in this market. Now, if we look at things from the fundamental perspective, that let's go into the economic calendar. We have the non-farm payroll benchmark revision coming up tomorrow by 2 p.m. UTC. Now, some of us might not be aware of this report, this non-farm payroll benchmark revision. It usually comes in once in a year, and it gives us a cleanup of job data, revising all the job reports that has been published since the beginning of the year, right? So it can show that job growth was overstated or understated in prior months, and it can also cause huge immediate volatility, but not as strong as the NFP, but it can shift the broader narrative about the labor market. And from all ramifications, the expectation is not too good, as everyone is expecting that in the last month, the last 6 months has been inflated, of course, and that this one here is going to be giving us a true picture. The job status, the labor and the status of the labor sector in the United States is going to be like. So everyone will be looking forward to this report tomorrow by 2 p.m. UTC. And like I said, market is expecting it to show that the US added far lesser jobs than originally reported between April 2024 and March 2025. And that will confirm the labor market has been weaker all along. And this is going to be a big talking point here for us all as we delve into the market, because at the moment, if we look at what is going on here, it appears that the dollar is weak. And if this job report comes in lower, showing us that the status of the labor sector has been inflated in the last, then we may likely see the dollar drop significantly. And considering the fact that we are at a critical juncture here, right within the demand zone and the key level at the $97.70 area, a breakdown, retest, and continued selling pressure below the structure will definitely support a decline in the price of the US dollar. So we'll continue to monitor price action around this area as market participants anticipate this report tomorrow. Then on Wednesday, we have the producer price index, which is also considered to be an inflationary data, but from the part of the producer. It's coming in 12:30 p.m. UTC on Wednesday. That is it right here. Have the consumer price index, and if inflation cools, markets will double down on Fed's cuts. So that means that the US dollar will stay under pressure. But if the data comes in higher, the dollar might find a floor from this $97.70 level to find some new high if possible. Then on Friday, we are going to be looking at the publication from the University of Michigan. That is the Consumer Sentiment Index. Now, this report here tells us if households are feeling tight or holding up, and low confidence adds up to slow down in the US economic narrative. So from what we have here, if the figures comes in higher than expected, it could push the dollar higher, but if it comes in lower, we could see a decline in the US dollar. So the idea around trading the dollar this week is the question on everyone's mind now is, does inflation confirm the slowdown or push back against the dollar, or how much damage will that benchmark job revision reveal? So the sentiment in the US dollar market dynamic is going to be driven around these two factors. Now, if you would ask me, point, even though the dollar is looking very vulnerable at this point in time, the fact that it continues to find buy pressure around that demand zone here at the $97.50 level and the $90.70 area, for me, still gives the dollar some chances to find some room to the upside. So I will still be leaning towards a bullish expectation unless something significant happen, like a breakdown retest of the structure in the next couple of days. Now, with the information we have gathered here on the US dollar market dynamic, let's run through the asset we are monitoring for this week. Let's see how the dollar is influencing the sentiment around this market. Now, the first asset I'm going to be taking on this morning is going to be the USOIL spots, of course. And what you see here is the 4 hours time frame of this market, right? And I'm wondering, my structures are not okay. Fine. So it's finally loaded, and I didn't really go too far on the USOIL spot here. Now, this is what I was looking at. So what I did was to take into account the character of price action since the beginning of this month. That's about 8 days of historical data. And one thing you will notice here is that ever since price tested this $65.70 zone, the market, the price had evolved into what looks like a descending channel. So when we connect the series of lower highs, we have the resistant line of the descending channel. And when we connect the series of lower lows here, we have the support line of this descending channel. And this, of course, tells us that the price of crude oil has been dropping in the last 1 to 2 weeks now. And with the recent weakness in the US dollar, especially from what we saw last week, it may be giving the US crude oil some breathing room. But the big question is whether demand fears outweighs what will support it, right? Now, one of the major factors that I can tell you for free that could be influencing the US crude oil is the US dollar. Now, the US crude oil being a US dollar denominated asset, whatever happens to the dollar will definitely influence the price of US crude oil. Now, the question is, how is that possible, or how does that happen? Now, for you to buy the US crude oil from other currencies buying US crude oil, if the value of the dollar is high, for them to convert to the dollar, they need to pay more. So that means crude oil will be very expensive. And when the dollar is high in value, the demand for crude oil will drop because it becomes very expensive to buy. But if the value of the dollar continues to drop like what we saw last week, then the crude oil will become cheaper. And when it becomes cheaper, it will increase the demand for this commodity. And that's definitely could support an upward scenario in this market. That's one. Then secondly, with the war tension in Ukraine is still very strong. Russia just carried out its biggest air attack on Ukraine, and this raises the chance of more Western sanctions on Russian oil, meaning less Russian supply on the world market. That's less supply, and scarcity of the commodity market equals to higher oil prices, right? Then we also have the OPEC plus situation here where the OPEC has agreed market, and this is definitely going to increase supply in the market and could be counterintuitive to the war tensions and the value of the US dollar at this particular point in time. So we're within a balance. Will the sentiment in the market lean towards a cheaper US dollar / the war situation, the tension in the Russian-Ukraine, or will they be leaning towards the OPEC plus output decision? Now, the structure on the chart will definitely give us an insight into what is happening. Now, looking at the structure here, I already missed out on this buy opportunity that started this week. As soon as price tested the support line of this descending channel, we saw some buy pressure resume there. And of course, that level there at the $61.50 level remains my key level going into this week's trading session. So as long as price remains above this, we'll be bullish in this market. Now, something interesting that is beginning to happen here. Price is right at the resistance line of the descending channel, and the question here is, will price break out of the structure to emphasize the strength of the buyers, or will this become another barrier for buyers to incite a sell-off in this market? So you can see that we are at a crucial juncture, right? And depending on how the market reacts here will determine if we are going bullish or bearish. Now let's scale down into the 1 hour time frame. Now the 1 hour time frame is our execution time frame, right? And when we scale down into the 1 hour time frame, this was what I was able to come up with. Now this week I missed out on this one. This whole breakout happened during the Asian session, and of course fast asleep when this whole scenario happened, and I'm going to be exercising patience to wait for new structures to emerge here. So we had a breakout of this range bound structure about 2 AM UTC, and we can see price is right into that resistant line of the descending channel. That's around the $62.75 level, a level which in the past last week was at some point serving as a demand zone. As you can see, when price came in here, we saw buyers coming to push price up. The second attempt happened here, but it wasn't strong, as we saw price drop from this area on Friday after the NFP report. Now price is back into the structure, as you can see here, and in the last 4 hours, the market has been oscillating around this area, emphasizing how crucial this juncture is. So we have a beautiful confluence at the $62.75 level, sharing a structure with the resistant line of the descending channel. Now, what I'm looking out for here is this. Are we going to see price retrace back into the structure that where it broke out this morning, the uptrend move, or are we going to be seeing a breakout retest of this resistant line of the descending channel to emphasize the strength of the buyers? Now, if I consider the weakness of the US dollar at this point and the tension between Russia and Ukraine, I want to be leaning towards a bullish bias. Now, buying here is looking promising for me, having stop losses somewhere around the $62.40 level to capture any form of retracement to test the resistant line of the descending channel to continue the uptrend move. So what I will do here now is to place a buy order at this point. If you're willing to join me here, you can place a buy order above the $62.75 area, and of course have a stop loss below the $62.40 level, and that will be roughly about 35 to 40 pips of stop loss on this one. And let's see how far this bullish momentum is going to go. But if at any point in time we get taken out of this buy and continued selling pressure persists here, we might be, if convincing, I could sell the breakdown of the $62.50 level somewhere right here, especially if selling pressure persists there. So let me mark that structure out. $62.50 level. Now, the reason why I will consider selling there is simply because of the fact that price will still remain below the below the resistant line of the descending channel. And if price gets it back into the $62.50 level, we move all stop losses, secure the sell position, and watch to see how price will react to the structure. If buy pressure resumes again, double bottom structures, or continue rejection there, it could welcome the next leg of bullish momentum. So let's see how the market is going to play out here. I still remain bullish, leaning towards the sentiment surrounding the weakening of the US dollar at this point, and of course the Russian-Ukraine situation. So let's see how far this is going to go. Okay, and if there is anything new, I will be updating us on my Telegram platform. Okay, so if you have any questions, or you need some clarity, or you need some further clarity to what I just explained, you can feel free to drop your questions in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? And all I have said so far has been quite comprehensive. And with that said, let's move on to the next asset on our watch list. So the next asset on my watch list is the GBPUSD. That is the pound sterling against the US dollar, right? And for the GBPUSD, the weaker US dollar has helped the pound sterling to gain some traction in recent times. But UK fundamentals still remains very soft, or let me say weak. So this pair is riding almost entirely on the dollar direction going into the new week. Now, looking at the structure here on the 4 hours time frame, after capturing the character of price action since mid-August, you can see that we have a situation where price appears to be evolving or as a descending channel. So connecting the series of lower highs here, we have the resistant line of the descending channel, and then connecting the series of lower lows, we have the support line of the descending channel. And in the last let's see, since August 13th, that's 3 weeks of historical data, we can see that the 9th of August, that's about the buyers make the first attempt of breaking out of the resistance line of the descending channel right there. And then we saw the second attempt happen. The first one appeared to have failed as we saw price come back below. But following the prior to the NFP, we saw price break out the second time. And since then, price action is still right above that resistant line of the descending channel to emphasize some potentials that the buyers have in this market. Now, one thing you would have noticed here is that since last week, we somehow have a barrier around the 1.35500 level. Now, last week, the upper Friday, we saw that sellers found it difficult to break through. Last week, the same thing happened here on Monday. And look at what happened despite this poor NFP. As soon as price tested the structure, we saw price drop again close to the structure again. So going into the new week, my key level is going to be at the 1.345, which simply means that as long as price remains above this level, I will maintain a bullish bias here. But that does not necessarily mean that there could not be short-term selling ideas here, especially if you are a day trader or a scalper. That's about how many pips that is. That's about 60 pips thereabout, as we could be seeing price come back to retest the structure that was broken to continue the uptrend move. Now, to help us have some clarity into the 1 hour time frame to see how the market has been playing out since the beginning of the week, of this new week. Now, before I go into that, what are the factors that will be influencing the GBP against the USD this week? Now, first of all, I talked about this earlier. The chances of a Fed rate cut after the weak US job report may limit how far the dollar can rise, and this could support the pound sterling at the same time. And I think this market is going to be driven around the Fed cut expectations, really. Now, looking at what has been going on here since the new week has begun, the first 1, 2, 3, 4, 5, 6, 7, 8, 9 hours of the new week was more of price consolidating. As you can see, price was initially confined within the 1.35060 and the 1.34825 to emphasize the prevailing uncertainty during that time frame. Now, you know how we treat our range bound structures here, right? As long as price remains within them, we exercise patience and wait for the structures to mature. And what do we look out for? It's either price break down the support line of the range bound to give us selling ideas, or break out of the resistance line to give us buying ideas. And as a result of this, you will see at the bottom of your screen that I already have a buy position running on the GBPUSD, though it's not running in profit yet. And this is driven by the fact that price broke out of that resistance line here, and we may be seeing a situation where a retest of the structure could be the beginning of another wave of bullish momentum. So I'm leaning towards a bullish idea here and be looking forward to add more buy if a breakout retest of the 1.35500 level happen. So if price breaks out retest that one, I will be thinking of adding more buy position to the existing trade. So stop loss on the buy position here will be right below the range bound, which will be dovetailing to about 25 pips of stop loss. So let's see how this is going to play out, give enough breathing space for Brown. So I remain bullish on this one. But if it so happens that the support line here gets broken to the downside, a retest could incite selling ideas, where as soon as price gets into the key level at the 1.345, that will be about 30 pips, we all move all stop losses, secure the sell position while we wait and see if the key level at the 1.345 will get broken. So if it gets broken to the downside, a retest of structure could confirm more selling ideas. But if sellers find it difficult to break through, I will be looking to join a bullish move from this particular area. So I still strongly believe that the pound sterling will remain bullish, especially considering the Fed rate cut expectations surrounding the US dollar. So it's a simple structure we are using to navigate the market today. A range bound structure. Price had already broken out of the resistance line of the range, and this keeps the bullish bias intact. And of course, we will not consider selling unless the support line at the 1.34825 gets broken to the downside. So that is basically the idea around my trading decisions on the GBPUSD today. So let's see how the market will play out, and of course, if anything new comes up, I will be updating us on my Telegram platform. So if you have any questions, I look forward to hearing from you. Any questions whatsoever, I'm here and willing to be of help in that regard. All right. So I guess we are all on the same page. I can see it, and I will assume that we are all good to go. And with that said, let's move right into the final asset. So the final asset on my watch list for this week is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, you saw it last week. As soon as the job data came in, gold took off on a new rally, hitting a new record high, breaking the $3,600 level, as you can see here. And if the dollar continues to stay under pressure and the treasury bond yield also drops, gold could extend for the higher. But if CPI print comes in hot, we could expect some resistance, which could bring price back to the downside. Now, factors supporting gold is very interesting. In the recently, we saw China from the reports China published. China has kept on buying gold for its reserve, and of course, this is the 10th month in a row adding more demand and pushing the price of gold to the upside. Then we also have the situation around the Fed rate cut expectations, which continue to support gold at the moment, but traders are looking forward to Wednesday's PPI and CPI data, where the reading could lift the dollar and put pressure on gold, and as a result of this, we may likely see some extended sideways trading activity prior to this event as market wait for this event to happen before making any aggressive bet on this commodity. So in short, rate cut hopes, strong central bank demand, and upcoming US inflation data will be driving the sentiment around this week. Now let's look at what things are looking like from a technical standpoint. And of course, this technical standpoint will be giving us an insight into how the market is thinking. And what I did here on the 4 hours time frame was to capture what has been going on since the beginning of this month. And if you look at this closely, you'll see that the price of gold had continued to rise since September market open. As you can see, higher highs and higher lows, and within this higher highs and higher lows, I was able to spot a channel, an ascending channel to be precise. As you can see here, we have the support line here, and of course we have the resistance line, and I have an imaginary line that separates the upper part from the lower part. Now, one thing you will also have noticed within this ascending channel is that not settled into this support line here, but instead had climbed into the middle support line, which of course tells us how strong the buyers are in this market. Now, because of this, I want to be using my 3,550 level as my key level going into this week. Now look at how that level shares a confluence with our trend line, and which means that there could be the possibility of price coming back into the structure, where in fact I will be willing to join a massive move at the site of buy pressure around this particular area. And of course, if we go to as far back as last week, we saw how that 3,550 had played a significant role in determining the direction of price action. Look at it here. It was a demand zone, and then during the midweek it was serving as a selling niche as buyers found it difficult to break through, and not until Friday we saw that level broken out with an engulfing bullish candle, and ever since then price has maintained its momentum above that particular structure. So what this means here is that I will not consider gold from in a long term except a breakdown retest of the structure happens. But if you are a short-term trader, we could see some short-term opportunities if selling pressure persists. Like I said earlier, that if US inflation data comes in higher, we could see some form of resistance where the 3,600 could be a barrier for buyers pushing price back into this area. And if we look at the distance between here and here, we are talking of about 470 pips in that regard, which is quite huge and not something we do want to miss out on. Now, with all of the information we have gathered here from both technical and fundamentals, what is going on in this market? What has been going on since this new week began? And to see this, we will have to scale down into our execution time frame, which is the 1 hour time frame. Now, zooming into the 1 hour time frame, you'll see clearly there was a form of indecision going on in this market, especially 1, 2, 3, 4, 5, 6, 7, 8, 9 hours before that breakout happened. So it was more of a range bound between the 3,597 and the $3,577.50 area, and this whole breakout happened around 6 AM UTC. I was not on my workstation at that time, so I missed out on this buy. But if you are taking it, you currently will be running with over 160 pips in profit. But if you are yet to take it, well, we have no other choice than to wait patiently for new structures to emerge. Now, what are the structures I am looking out for? Well, since we already have a breakout of the range bound here, we could expect a theoretical pullback where price could come back into structure and continue buy pressure here will resume the next wave of bullish momentum. So that is one scenario I'm looking forward to. Then the other possibility here is if price begins to consolidate, like I told you earlier, that we may likely see some extended sideways trading activity prior to the CPI report. And if that is going to be the case, it could evolve into an uptrend continuation pattern. Let's say the flag pattern, the pennant, or a bullish rectangle where the breakout of the resistance line will be the signal we are looking forward to join a bullish move. But if it turns out to be a double top structure or a reversal setup here with lower highs and multiple shooting star candles around that area, we could see the beginning of a nosedive, maybe back into structure to continue the uptrend move, or even drop to as far as that level, had the key level we talked about there, had the 3,550. So for me, we are at a critical juncture here where, depending on what happens here, will determine what we will be doing next. Now, for the sake of clarity, I would love us to scale down into the 15 minutes time frame so we can see if there is any form of structure evolving on the lower time frame. Now, scaling down into the 15-minute time frame, you can see what a beautiful structure is evolving after this impulsive leg. You can see this impulsive leg. The market has gone into a consolidation phase, which further buttresses what I said earlier, that we may be seeing some extended sideways trading activities ahead of the what's it called again, the CPI data, right? Going to be marking out a resistance line here. So we have the 3,614.00 level here, and then we have the here. We will do some adjustment when we bring back the candle chart if there is a need for that. But let's mark this out. I usually like doing this with my line chart first and then bring back the candle chart to see, okay, 3609 is looking good and we have 3614. So buying above the structure is making a lot of sense. So I will just place my buy order right now. Price remains above the resistance line. Let's be hopeful that this momentum will continue to the upside. And then let's have what's happening here. Okay, so and let's have our stop loss is somewhere below the structure. That's about 55 pips of stop loss here. Okay, so that's about 55 pips of stop loss. So I already placed a buy on the gold stop loss below the support line of that range bound to give enough breathing space for price action to move around. So that is basically what we will be using to navigate this structure today. Okay, now if we get taken out of this buy and sellers continue to negate the bullish attempt, well, a breakdown retest of the 3,609 could incite selling ideas. And in fact, I would love to see a breakdown, then a retest of structure for confirmation's sake on the lower time frame before jumping into that sell. What I am using to navigate the market today. So we have a beautiful structure on the 15 minutes time frame. Let's see how the market will react to the structure. And you know, when we have a range bound, it simply tells us that a negotiation between buyers and sellers are ongoing, and whosoever wins will reveal itself on the charts in the form of either a breakout or a breakdown. So you today on the gold commodity, let's be hopeful on this one, and I wish you all the best of as we continue to monitor price action. If you have any questions whatsoever, feel free to let me know in the comment section, and I will take about 5-10 seconds off, then come back to round off on today's Forex Morning Mastery. Stay tuned in. All right. So it's on this note, I guess we have come to the end of today's Forex Morning Mastery. I hope you all found it insightful, and I'm very excited to be back again to trade the financial market, and I will be giving you updates as soon as I get on the chart. So today we were able to talk about 3 of my instrument that I'm monitoring for this week, which includes the XAUUSD, the USOIL spot, and of course the GBPUSD, where we were able to identify simple trading setups that we are going to be using to navigate the market today. And I do hope you are able to mark out the structures out on your chart, as we are going to be using them to guide our trading decisions. If you have done that, well done, kudos to you. So all we just need to do right now is exercise patience and allow to mature. And if there's anything new, trust me, I will be updating you on my Telegram platform. So it's on this note. Oh, for those who joined me for the first time, trust you had a lot to gain from this session. If you did, why not join us in our subsequent edition? The next one is going to be on Wednesday, 8:30 AM UTC. That's about 9:30 AM West African time, where we shall be coming here again to review how well these assets are doing, and of course prepare ourselves for the second half of the trading week. So it's on this note, I want to wish us all the best of luck. Trade smart, obviously, and do have a wonderful evening, everyone. Bye.